Hey, good morning. This is Robert Foreman, Arizona loan officer and real estate broker. Today is December 16th. I've got a brand new, actually, two reports up on the real estate side. I have the rental market report for December, which is actually based on last month's statistics. And then I also have the housing market report as well. I've got these links embedded in the post. Check it out, especially if you're out there actively looking to purchase. Remember, on the real estate side, I have incentives for you. If I rep you on it as the buying agent, I rebate 25% of my commission towards your closing costs. And if you're also looking to sell, I have incentives for that too. Let's go back to the main topic of this post, which is home ready. I'm going to pull it up on my mortgage website, and I've got basically a quick informational flyer on home ready. Great product for low and moderate income. It's a 30-year program. The minimum FICO score on it is 620, and it has a minimum 3% down. That's actually better than FHA. FHA requires 3.5% commitment. Now, typically, the rates, home ready versus FHA, the rates are higher. However, the mortgage insurance is usually at a reduced factor. So I find on most days, if I'm pricing between home ready and FHA, home ready has the lower overall payment. And that's really what you want to focus on is the lower overall payment. And remember, on a conventional loan, the mortgage insurance can eventually drop off, or if you've built up a sufficient amount of equity, you can contact your bank or servicing company, ask them to remove it. Of course, in order to do that, you'll have to pay for an appraisal to establish that the home or that you have built up a sufficient amount of income. If you have any questions about that, you can direct message me anytime. But this is a great program. And I would tell you, most first time home buyers that I work with, we almost always end up going through Home Ready. Some things to know: credit score, minimum 620, although the pricing is much better at 680. And there also can be, let's say, if you have a married couple and maybe one of the spouses has less than perfect credit, unlike FHA, where that person's credit or debt load can impact for debt to income purposes. Here in this case, not only can you just make it work with just the single credit profile, but as a compensating factor, that non-qualifying borrower's income will be a compensating factor for you to get approved. So that's really kind of nice. But there's some additional work that's involved. Typically all first-time homebuyer programs are going to require some sort of online education program. And these links that I'm showing you on my screen, I'll have them embedded in the post so you can learn a little bit more about not only the product, but for, in this case, the homeownership requirement. I'll have that link in there as well, because as a first-time home buyer, it is a requirement for this program that you complete a online education, homeownership education course. But here's really the tricky part of the product. Again, it's based, this is primarily for low, moderate income home buyers. And so Fannie Mae has a tool to determine whether or not your income or you meet the income requirements for this program. So right now we're looking at an active listing that we have on the real estate side. And I'm going to use this address to showcase this tool. And this tool, I'll have the link embedded in this post so you can actually search properties yourself to see whether or not you would qualify on the income requirements. But anyway, let's go ahead and check out this tool. I'm going to pop in this address and we'll go ahead and hit enter. And you'll see here that it brings up the area median income for that property. And you also notice here too the home ready income limit. So you cannot exceed for this particular property, I should say, or in this example, you can't exceed $62,240 in annual income. If you're underneath that, great. We potentially have a deal for you. What's also nice too, I don't know if I'd mentioned this previously, I'll restate it again. It allows or affords a higher debt to income. This particular program, you can go up to 50% debt to income and still qualify potentially for this loan. But anyway, I'll have this link embedded as well as some additional information about Home Ready. And if you have any questions, or you want to get started, go ahead, call, email, direct message me through LinkedIn, whatever preferred means of communication you want to use. But anyway, hope this information helps, and I hope to talk to you down the road.